Hey there, we're going live, and I'm going to try and bring in a buddy of mine, Oliver, to talk about volatility. If I can find him on here. Invite guests. So anyone that's really in here can join right now. Yeah, but I'm particularly looking for Oliver. Where are you at, Oliver? Are you here? Come in, Oliver. Join. Oh, it looks like you joined the conversation, but did you join in via the lower right? If you look down below where you see those two little faces, are you on the Twitter app or what are you using there? Let's see if we can get you through. Come on, buddy. If you're on the Twitter app, like on your phone or on a desktop, you should see where it says say something in the lower on the bottom. And to the right, there are two little happy faces. If you click on that, should say you're on your laptop. Okay. Do you have those two little happy faces that are to the right of the bottom of your screen there where it says say something? Maybe this is only a phone thing. Maybe that's why I've got some people in and some people not. Still trying to get this worked out. You're on your phone and are you using the web or are you using the app or how are you getting in there? Scroll full comments. No, I don't see that. Okay. Well, looks like we may have another failure here. Still working through how to get this process to work. Taking my phone. Okay, so talking. All right, so if you open up on your phone on the Twitter app, maybe that's what you got to do. Let's see if we can do that. I'm gonna watch it on my desktop as well. See what that looks like. Oh, there's me. I'm gonna send another guest invite out there, see if he wants to come in. You know, it goes. So we're still working through it. Hopefully, we get him on here before too long. Grab yourself a cup of coffee. I'm drinking coffee in my mug from Egg Harbor. This is from Geneva in St. Charles, but I'm in Wisconsin right now, so it's nice to have some sort of Illinois with me, I guess. How are we doing down there? Let me know, Al. All right. Well, for those who are tuning and listening, oh, what's that? Archie joined. From your phone, I think you got to click the two little faces in the bottom there where it says say something. Click those two little faces, and you should be able to add someone there. No one has asked to join yet. So can you ask to join? Let's see what we got now. So you join the call now in the lower right. Let me know if you see that. Where it comes up, it has those two little faces, and I should get a request to join the conversation. One of these little buttons can do for me here. So I'm sketching broadcast details. I'll leave that. So we're still having limited success with this process. The broadcaster has enabled the guest to join the podcast. You may hear audio from people who have blocked it to join as guests. Okay, I understand that. All right, I see you keep joining the actual conversation now, but again, you got to click the little buttons in the lower right there to actually get in there. Oh, wait a minute. Al, are you in there now? Yeah, I think that's the way it's kind of worked. I think that's why I've had some problems with people in the past too. So we got you in now. I can definitely see you're here, which is awesome. Welcome.
Okay, cool. Thank you. I'm going to start this one. I'm doing well, thank you.
Good. You want to tell everyone who you are and what you're doing?
Sure. So, I think we met like 2 or 3 years ago at a great team meeting that you did downtown.
Yeah, you came to the office, I remember.
Yeah, exactly. So I told you back then that I was making a market in rough rice and oats futures.
Yes.
So I did that for like, a little less than 3 years. And then I started to trade part-time instead of full-time. And so now I'm trading options more, that's more or less what I'm doing.
Excellent. And trading options in which markets?
So mostly grains.
Grains, okay.
Yeah, a little bit of treasuries. And I used to do a little bit of metals, but I don't know, for some reason I've had some setbacks in metals this year.
Yeah. You're not sure why, but are you using like pretty much the same model between grains and metals, or are you trying to tweak the model, or why do you think it's not working in metals but it works in grains?
So what was hard for me in metals this year is that, we've seen this tremendous expansion of volatility.
Yep.
And so that means, really wide bid and ask spread, which should be good, it should be good for me, but somehow it didn't quite work out. And the other part that's hard for me in metals is that what we've seen for the most part is gold go up when stocks go up and gold go down when stocks go down.
Yeah.
And that's a very big change. And for me, it's, it can be very confusing. I mean, of course, it's quite correlated with the euro.
Mm-hmm.
But so that correlation still works for the most part, but against stocks, it's like kind of a strange world.
Now, which correlation? Talk about that correlation for me. What correlation are you looking at?
So the thing I was looking at is, for the most part, historically, when stocks go down, gold goes up.
Yeah.
So it's more like an anti-correlation, and when the euro goes up, gold tends to go up. When the euro goes down, gold tends to go down.
Yeah, anti-dollar.
Yeah, exactly.
Well, that makes good sense. So what's working for you now?
So I've been doing just grains. I've been sticking to grains, just trying to essentially find some options that are a little overpriced and sell them.
Okay.
Or a little underpriced and buy them.
Okay. Now, are you doing any strategies with that, or are you just doing outrights? Are you doing like covered calls, or are you doing anything like diagonals? Or
I've been doing both. I've been doing call spreads, put spreads. I've been doing outrights too. But what I do more and more now, if I do outrights, I just hedge my delta.
Okay.
I just feel that it's just such a better position to be in. I just had the case like a week ago where I sold 7 corn calls at the close, and right away they were against me. Right away.
I know all about that. I've been there.
Yeah. I mean, I just put them on. I mean, and the guy, it's like the guy buys them from me, and right away it goes bid, and I'm like, oh no. So instead of just taking the loss right away, which I could have, I guess, but I just felt that there was an opportunity to buy 2 futures against them, you know.
Yeah.
And it turned out, you know, I ended up losing like 15, 20 ticks, so nothing too bad, versus just being outright and, you know, suffer through the, you know, not knowing exactly how much I'm going to lose and everything.
Yeah. Yeah.
So, and I just feel, you know, delta neutral is a better way to trade vol, I feel, if you want to trade vol, you know.
Yeah. Yeah. And I agree. I mean, that delta neutral just seems to be the wisest way to kind of, I mean, obviously you're limiting your upside. Obviously that's part of the whole game, but you're definitely keeping your risk in a bit of a container there.
Yeah, exactly. So, and also the other part is that, you know, I try not to trade too big.
Oh, sure.
You know,
Yeah.
my biggest position this year was 30 corn calls that were way out of the money.
Uh-huh.
I lost money on them, so, you know,
It was,
I
you
don't.
said it was 30 corn calls?
Yeah.
Yeah.
So they were, you know, they were December calls. We were trading like 335, and they were like the 440 strike. It was a
Okay.
few months ago. So it was mostly a vol play, but of
Yeah.
course vol came in, you know.
Yeah.
So I need to get out.
Yeah.
So, but what's super nice with corn is that, you know, we have this market which is just extremely liquid, you know.
Yeah. Yeah. Yeah.
So
That definitely helps. There's a big difference between trading options in corn and trading options in rough wheat. That's for darn, or in rough rice. That's for darn sure. So.
yeah. So yeah,
And go ahead.
if you want to talk about vol, I mean, I made a little, not a spreadsheet, I have a little paper.
Uh huh. We'll
So
talk
I
about it.
was
What?
like,
Yeah.
you know, volatilities, yeah.
Yeah. Go ahead. What did you design there? What did you create?
So I was like, you know, it's just a reminder. So December is 28%, 60 is about 7%, gold is around 20.7%.
Okay.
So, you know, when you look historically, I mean, these are kind of, you know, higher vols than normal, you know.
Yeah.
And, you know, I would say in grains, we're in, you know, we're in line, right? 20% December corn. I mean, 18% November soybeans. That sounds about right.
Yeah. So what does that tell you when volatility gets spiked up like that? Does that make you want to sell it, or does that mean it's breaking out? You want to buy it? I mean, how do you play that? You do that kind of contrarian, or you do it kind of?
Gets exactly. Now at November we are 2.5 and December 3.3%.
Yeah.
And I'm like, something has to give, right?
Yeah.
Either Treasury vol is too low or ES vol is too high. I mean, something is not in check here.
Yeah.
So I'm probably gonna try to buy some Treasury options at some point. You know?
Yeah. That's it's all goofy when it's, with all the talk of negative rates, and when you get close to that, it's like, well, where are we supposed to go at this point? So volatility's been such a dry beast in treasuries for a long time now. It's got to be all frustrating right now.
Yeah, but I'll say it's a totally different market, but we saw like 12% November beans vol at some point, you know.
Oh wow.
And that was a complete give up. People had given up, and I feel that's what we're seeing in treasuries. You know, people are giving up. You know?
Yeah. So
And
what's gonna take to move that around then?
so I think we kind of have to get away from that stalemate or the gridlock we're seeing, where on one side we have the Fed, which is really a price stabilizer for treasuries,
Yeah.
and we have also, you know, October coming up, which, you know, it's kind of a lot of uncertainties with the election and everything. But at the same time, I mean, if we have just 1.5% inflation,
Yep.
we can't stay at 40 basis points yield, you know.
Yep.
So I just think that, you know, one of these sides is going to win. Either we go at 0% or we go more at, like, you know, at least 70 basis or even 1% yield.
Yeah.
But I don't think we can stay in the middle like we are, you know.
Yeah. And, there was a lot of talk yesterday with the new home sales number that came out that was so strong. that it's just unfathomable to think that the Fed is still saying they're going to sit in their hands for a couple of years and keep rates down here this low for a couple of years. It's beyond imagination for a lot of people, because I mean there's just a lot of numbers pointing towards inflation right now that really say that you just can't do this. You just can't do it. Demand is out there. There's huge demand out there for stuff. So we'll see how it goes, but it would be nice to see rates moving again to a great extent.
Yeah, I think I mean, I was just looking at JGBs yesterday because I was like, okay, if we completely give up, where do we go?
Yeah.
And so implied vol on JGBs is 1.49%.
Okay.
So it's still like 100 basis lower than November volatility for the end.
Yeah.
But I just don't think we get there.
It's I've talked with someone about 6-9 months ago about that, the nightmare of our U.S. Treasuries going the way of JGBs. I mean, I remember back when I traded for a fund back in the mid '90s. I mean, JGBs, it was a great market. Those things moved all over the freaking place. But
Oh wow.
since they went to like negative rates and there's basically no rates in Japan, JGB market just dried up and's gone to nothing. It's like it's not even like a trader's market anymore. It used to be a great like scalping intraday big swing type of marketplace, but it's just totally been dried up. Kind of like, I mean, like bonds and notes used to be a little bit, where it wasn't like one big move, sit and do nothing. They used to have a lot of intraday volatility in there, but that market really got sucked up when they took the rates down to basically nothing, and they just sit there right now. So it's too bad. You hate to think that it's going to happen to U.S. Treasuries too. That's such a great trading market, always has been. There's so many of us out there who really cut our chops in rates. I mean, I came out of Eurodollars, and I know a lot of my good buddies that came out of the STIRs and the Treasuries over the Board of Trade. So it's you hate to see them being locked up with such little volatility.
Mm-hmm. Yeah, I don't think it's sustainable. I mean, it's just my opinion. I could be wrong, and it's not an advice, but I feel that in volatility.
We tend to. What was that? We tend to give up before huge. Yeah. Yeah.
Because essentially what happens too is that if people want to collect premium, they have to sell so many more options right now.
Yeah. So what are you looking for then? What's going to tip the hat and tell you, okay, rates are going to start moving again? Are there any type of indicator you have towards that would say it's about time for rates to really start flopping around a little bit?
I don't really have like an indicator or something. I do. I mean, the thing is, we've just seen like corn go up, like 45 cents versus its low. So, I mean, if that doesn't tell you that we could have some inflation, I mean, I don't know what will.
Yeah. I mean, the grains are definitely telling a story and a half. I mean, certainly look at soybeans. Weren't soybeans just at like 2-year highs the other day, weren't they?
Yeah, pretty much. I mean, we right. I don't have it precisely, but
yeah.
So
and I think they dipped back down below $10, but I think we hit at least multi-month. I want to say it was 2-year highs in soybeans just the other day. But yeah, we're back down to 10. We're back down to 10.05 right now, but that was kind of a story. And I think a lot of people are starting to call for him to get into the 12 handle, well into the 12 handle, but that kind of ate him up a little bit. So yeah, we got up to, what is that? Almost 12 or almost 10.50. So not bad, but back down. But yeah, I mean, there's just a lot of things that are sitting there peeking at it. When you look at all these people buying houses right now, you look at a lot of things that are moving around. It feels like inflation's starting to poke around a little bit, but we'll see. Lean hogs are having another big year. Yeah, lean hogs are having a day. They're up into the 3.5%. So that'll kind of get to you as well. But
so there's this, and also we saw gold. I mean, I know that it's down, but it has still rallied like $350 or something, over the past 6 months.
Yeah. So where do you think gold's going then?
I think, I mean, the pause makes sense. I mean, I think we have a big pause, but we're gonna try once more. We're gonna try 2000 again, probably next year. Right?
Yeah.
That's what I think.
What about crude? I don't know if you look at crude too much at all. If you play that one, but what's your feeling on that in general?
I mean, it looks. I'm not sure about crude, but I say gasoline. Gasoline looks cheap. I mean, because at the end, traffic is back in action. We're seeing a lot of shipping activity.
Yeah.
I definitely. But gasoline, it's a really wild market.
I mean, RBOB's trading 118 right now, the November contract. It's kind of it's crazy to see it down here.
Yeah. So I just think that. I mean, I may try to buy either some crude calls or something.
Okay.
So we'll see. I mean, I'm thinking grains. I'm thinking. We're probably fairly priced. I'm not sure we rally in October like we usually do because we've already rallied, right?
Yeah.
But I'm positive for next year. I think for grains. I don't know. I feel that I think the low that we've seen, like 2 months ago. I mean, I think that's a really solid low.
So you think grains have bottomed out then? Yeah.
I think I mean, next year we could have a big year for grains finally. We've been waiting for it, and
yeah, you're starting to see those headlines that's due to come up, and we're expecting a pretty harsh winter, and then see how that really plays out to it too. That's going to actually put a bit of a spike into the grains as we get into next season. But I don't know.
Exactly, and it's like if you look at beans, I mean they're still cheap historically. So.
Oh yeah, yep. $10 beans is nothing to really be too worried about. And I mean, wheat's down at 5.5, corn 366. So that's seems like a deal to me, but we'll see where it really goes.
Exactly. So yeah, I mean maybe some covered calls would be a good idea because at the end of the day, I mean it depends what kind of winter we have, but we could also have kind of this grinding market, right?
Yeah.
So I don't know if you really want to be long premium through winter, but yeah, covered calls could be good.
Well, cool. Anything else you want to cover today?
No, I think we've talked about pretty much everything. So.
Okay. Yeah. Well, good. Well, hey, I appreciate you coming on. I appreciate you talking, and maybe we'll do this again sometime. Otherwise, I will see you in the Twitterverse.
Okay. Thank you. Thank you, Patrick.
Thanks, Oliver. Bye-bye.
Bye-bye.